The Fed is going to have a tougher time of printing money and getting interest rates back down. The markets right now are aiming for an up day. We'll see if we get it. Jobs data comes in at 187,000. The market had anticipated 200,000. What does this mean? Is Bitcoin rallying today?
Hello and welcome to Crypto Street, where we bring you the latest and most intriguing stories from the world of cryptocurrencies. Now, let's begin our enlightening discussion with Gareth Soloway.
Jobs data comes in at 187,000. The market had anticipated 200,000. What does this mean? It means the jobs data is almost in a sweet spot. It wasn't hotter than expectations, but it wasn't so weak that the markets would freak out and say, oh my goodness, we're flying into a recession, we're going into a depression. It was really the perfect porridge, right? If you think about, is it too hot? Is it too cold? No. This number right here, 187,000, is just right for now. So this is what's concerning to me. So 187,000, perfect. Mwah, that's awesome. But what I don't like is, but wages still high. So what does that mean? Well, the Federal Reserve has said that they want to get inflation under control. If there's still pressure on wages, then that means inflation may still have some pressure. The markets right now are aiming for an up day. We'll see if we get it. The key on this, folks, this data, slightly weaker than expected, is bringing down yields. If we remember, one of the key catalysts for why the markets have been freaking out recently is that yields continue to go up. The 10-year broke above its recent high. That, again, has been problematic. Today, we're seeing a small pullback in yields with this slightly weaker jobs number, and that's helping markets rally. Okay, let's go to the Bitcoin chart here. All right, so is Bitcoin rallying today? Nah, Bitcoin not really doing much. It's so weird to go from the most volatile market being crypto to a market that is almost not moving. Now, is it lulling people into a false sense of this market is dead? Yes, that's usually what markets do. At some point, this will wake up. I don't know where it will be. Will it pull back to the 27 and change level? Will it go down to the lows? Will it just start to break up? That's what we have to wait and see. But I'm not even going to spend a lot of time on crypto, guys, because frankly, there's not a whole lot to say. There just isn't. There's some altcoins that I'm looking at, obviously in Verified Investing Crypto. I will be talking more about those. Jobs report overall, pretty nice. We'll see if the markets hold their gains. Watch the yields. Yields are so important right now. If yields continue to push higher, this market will go down. Fitch's downgrade this week was a big event for the markets because it sets a precedence. All right, it tells you that debt is starting to matter. And that means that the Fed is going to have a tougher time of printing money and getting interest rates back down. All right, because again, with $32.5 trillion in U.S. debt, at some point you got to pay interest on that. We know it's $1 trillion right now. It's only going to get more expensive. Downgrades, like I said earlier this week, a downgrade in a credit score for a country is the equivalent of my credit score going down, which means I'm going to get charged higher interest rates. So the U.S. will as well. So the lower that goes, the higher interest rates could potentially go.
Don't forget to join us as we continue to explore the unfolding events. Now let's look at the latest news in the cryptocurrency market. Then we turn back to Gareth Soloway, Bitcoin's roller coaster year. A 29% gain from August 2022 to 2023, despite recent dips. Economist Peter Schiff warns U.S. dollar collapse inevitable. Economist expects U.S. rating downgrade to accelerate de-dollarization process. $49 million crypto fraud. SEC files charges against a Utah-based company. Debtbox. AI large language models raised over $25 billion in the first half of 2023. The industry is starting to look like a bubble that's about to burst. Facebook owner Meta may launch chatbot personas next month. Binance adds Shiba to collateral assets list. Eyes potential Bone Shiba swap listing.
So this is the S&P 500. This is the pre-market data right here. So what we can see is yesterday after the bell, we had Amazon earnings. The S&P rallied up, or the spiders rallied up. We then came in with Apple earnings as Apple fell. We then floated higher. This morning, we were up at these highs. This is 4 in the morning, by the way, 4 a.m. Eastern time. We then faded. The jobs number came out. We flushed initially. Now we're moving back up. This is the 10-minute candle. Each candle here is 10 minutes long. So right now, the SPY is trading at 450.80. So the first thing we see on the S&P, right? So we have this beautiful channel going all the way back to 2022. This is the low in 2022, right? The low in October. Now, by the way, do you know when yields topped out? Right here. As soon as yields started to pull back, that's when we got this uptrend. So again, that's something just to keep in mind as yields go up. Does it eventually crack and break the markets? What we see here is this is called a wide range reversal engulfing candle. It's not just a reversal candle, it's engulfing. Why is it engulfing? Because it opened above this range of candles and it closed below this range of candles. That's a very, very bearish technical signal. If you find these at the highs of charts in recent history, which this is, especially with this trend line right here, I would say 7 out of 10 times, probability-wise, this is a short-term top. Now, what we saw the next couple days is we traded inside of that. We got some rallies, but we never took out that high. And then look at what the S&P did the following days. That tells us that, yes, we're getting a bounce today, but really this is now your line in the sand. True technician of the charts basically sees a candle like that and says, okay, that is a short-term top until proven otherwise. I just want to cover the NASDAQ real quick, guys. All right, so on the NASDAQ, we do have something here. Take a look. I'm going to zoom out. So we have a downsloping channel. We did get briefly above the downsloping channel, but look at where we came back to. Now, downsloping channels eventually do break to the upside, but in the short term, because the market is so extended to the upside, it is likely that this could be a failed breakout eventually, and we come back in and break back down. All right, now again, eventually, could be a year from now, eventually we break to the upside, but again, right now anyways, this you would assume this would come back down into this range. All right, now again, same thing with the NASDAQ. NASDAQ is trading up right now. The reason the NASDAQ's trading up is very simple. Why is the market overall trading up? That slightly weaker than expected jobs report. Let's zoom right in here. Okay? That right there. That's it. You want to know? I mean, I don't mean to simplify it too much, but this pullback in yields is giving the market hope.
What's happening in the crypto market? Let's take a quick look at those technical analysis. Bitcoin consolidated around the $29,000 level as traders readied themselves for the upcoming U.S. non-farm payrolls report. BTC USD rose to an intraday high of $29,375.71, following an earlier low of $29,066.24. Earlier gains have since faded, however, with the world's largest cryptocurrency now trading at the $29,145.77 mark. The decline comes as the Relative Strength Index, RSI, fell back towards a support point of 42.00. After hitting a ceiling above 51.00 in recent days, price strength is now tracking at a reading of 43.71. There is still optimism that bulls could re-enter the market after today's report, with the $29,500 level an initial target. That wraps up today's crypto news highlights. Stay tuned for more updates, insights, and analysis from the world of cryptocurrencies. Please share your thoughts in the comments below. Don't forget to like this video and subscribe to our channel for more engaging content.